Welcome to the Become Sensible podcast, where we discuss practical accounting, finance, and tax for everyday business. I'm your host, Fiona, and I'm here to show you that no matter what your business financial situation is, you can change it. Good morning and welcome back to the podcast Become Sensible. Today we sitting toward the end of the year and the end of Q4, and many of us as business owners, as the founders, we have a lot of anxieties and things to think about, like how to close this fiscal year and then prepare budgeting and planning for the 2026. And I can say you build a house. If your house foundation is not strong, you would have the next layer of the house will be wobbling and unstable. So if you jump right away into 2026 planning and budgeting and thinking about those new high big product launches and those bold marketing strategy without validating your 2025 financial foundation, you will risk to build the next layer of your business in a very instability, and everything will be shaking. So the noise, the pressure that you are feeling right now, that is your business is telling you that it needs more one final decisive inspection. So today we will talk about three phases of financial architectures you need to complete before January 1st to ensure that your 2026 growth to build on a solid rock. So number one, we talk about validation. Phase one's validation. So this phase is not about shame. It's just about collecting accurate data so that we can trust the map that we're about to draw. We need to validate the 2025 foundation to draw the 2026 blueprint correctly. So what is we need to do in this phase, foundation validation? Number one is close the book, then audit the data. I know if you are not a logical person or you are very good in terms of math and logical thing, you would think bookkeeping is a very boring thing. And then also it's just all about the data. But I personally see all the clients that who do really well in their business are the people that who actually on top of this, not because they need to do the bookkeeping, not because they need to reconcile the bank. Most of them who scale fast and is building a very strong foundation is that they have the people, the team that work on these accounting and financial record, but they will sit down with these people and talk about the number, ask the question, say, hey, Fiona, this is what I don't understand. Is this that assumption on this thing is not clearly. So they find the interesting in the bookkeeping and the data is not to manually do it, but to actually understand what is behind the number. And you know that bad data will lead to bad decision. Of course, 2026 will not perform exactly like 2025, and 2025 is not performed exactly like 4 years ago at all. But why? But what is this? Anytime that you drive to the markets, what is the market prediction and performance and all of this trend? But what is your internal capabilities? What is the internal data is talking? Because there's no one solution applicable for everyone at all, because its business is financial situation is totally different, and this applies in everything in life and in business too. That is why we need to understand where we are by actually look at in our data and our number. You cannot do the same way like your peer in the same industry at all, because they have a different capabilities, resource and funding and structure compared to you. Your cost structure is not the same like cost structure of your peer at all, even you in the same industry. Data is not trying to figure into that mold, but to understand what is our starting point, and from there you can move forward with okay, this is what I have. It's if we treat our company as a person, what is our witness, what is our strength, what is we have, and where's the gap that we need to fix it or we need to viewing. So that's including what? Like ask your team whether they finished their reconciliation and then look at the number and have a real conversation with the people in the team or like your professional CPA or bookkeeper to actually understand all of this going on in terms of cost structure, in terms of your net profit margin, in terms of like where things are at. Number two, finalize your tax footprint. You cannot calmly plan the new year while you don't actually know where is your tax liability for this year is. That is very like, and I know this like any client come with us for tax planning, tax situation, they have the anxiety go with it because even you try to ignore it, you try to think about other things, but in the back end, you know that there's might be a tax bill of like $100,000 coming in, and how you actually prepare for that financial situation and tax is very important because that will play into your budgets and your planning for the new year. So don't let it slide behind. Run the final tax projection. This is critical. This is not about paying, it's about optimizing your capital allocation. If projections show a high liability, there's still a few weeks left to you to strategize, like allocate capital to like retirement vehicle or any like necessary equipment. This will be like very helpful in your situation. Those dollars will be building your business, not just like funding the government like pay for your tax, because you can use those money to be invest into your business, into your retirement account, or in your own wealth and network, because that is give you the foundation for the next step in your business. And without actually having this conversation, you don't have the clarity to make the decision. Number three, make sure that all of the compliance, like 1099, W9, information about the payroll, W2, all the main compliance, it needs to be taken care of. Confirm every contractor about their W9, their total payment, their W2. Make sure that all of these things is not coming in you to you like suddenly in January 2nd at all. So now like your foundation is taken care, you go through the process to looking everything to close the year. And now we go to the phase two. It's called strength testing. That is 2026 pricing and profitability. So once the foundation is validated, we test its strengths. This is the moments that you ensure your price for your service, your product can actually support for the size of the house you will build in 2026. So that's the number one is the margin stress test. If you copy paste the same pricing that you have last year, the 2025 into the 2026, maybe it's not going to be performed the same way. Because why? The cost is rising, the inflation, the tariff tax is become effective. True cost of delivery is absolutely like increase. So you need to have a stress test whether your gross profit margins on your flagship offer, if it's trending down or much adjusting the pricing. Here is a 10% increase, a 20% increase in revenue is meaningless. If business come to your net profits is down like 7% at all because it's not actually increased because the operational costs is spent is increased. And I can say like every single year I see like software and every subscription is just increase the price automatically every single year. So then make sure that you understand your cost structure and where is the thing is rising the price. You need to into account to it. Post like software is spent is not a huge, but for some industry, I mean legal profession or like in my industry, the software cost is like is huge percentage in our operational cost. But then some of industry that you need to have a lot of capital expenditure, that might be just increased like tremendously too. The next one, number two, is stop the capital leak. Most of the time, if you business owners or like the founder, you that don't feel like your business is like profitable often have a leaking problem. That's not a revenue problem. These are forgotten like software subscription. Many spend that you never actually like look at into it. Like, I basically have a clients that why they when I sit down with them and look into their number, and they knew, so they never actually have the people that like have them to sit down to have this conversation and look at the number. And I would ask him like, okay, why this number? It's like, if you have the payroll that run 3 times in 1 week, what is happening that week? Or like you have like suddenly there is a strain number is going to your bank transaction. What is going on with that? And that's where you actually know where is your business money is leaking. There's just so many people, brilliant people in business that they make million dollars on the top in the revenue. But in between the operational spend, there is a ton of money was leading like hundred of thousand of dollar transaction is just leading. And because they were so busy with to like bring the revenue coming in for the business, they don't actually have a time to actually look at into these detail. So that is why if you have a professional that will sit down with you every single month and look at this number with you and ask the question and explain for you, that will be like, I mean, like life saving. But for you to prepare for 2026, like treat your expense report like a construction site that you need to look at in your cost structure and see where everything is going through. Phase 3, drawing the blueprint. This is 2026 strategy. Now with clean and validated like strong structure beneath us, we can calculate confidence and draw for 2026 blueprint. So this is like very important. 75% of small business fail is because they don't manage their cash flow well. It's not because they don't have a great idea or they don't know how to bring in the revenue or not know how to do the marketing, but they fail because they couldn't manage their cash flow. So the first thing is build the predictable cash flow map. Grow only is like feel very chaotic if you lose the control in terms of cash flow. Even if revenue is up, but your cash flow is like going through the roof too, like it's up and down with receivable, with inventory, with all kinds of spend, the foundation is like shaking. And so one of the things that I do with my clients in this period of time now until the end of the year, I just basically do the cash flow projection for the new year for them. And we would have like some depends on their cost structure and revenue structure to know, okay, which kind of revenue is predictable that we know that is will coming because of contract, because of the performance, because of the reason that go into our assumption, and then we can predict that. And then on the spend that coming out, we also like separate it between like, okay, predictable thing, like your payroll for the people on your team, or like rent is due every single month, regardless whether your business performing or not. So there's certain fixed spend is predictable, and you need to make sure that end of the day, your net ending cash is doing fine with it. And then like this, the bottom of it will be like the part of whether is new product launch, new service launching, new type of services coming into the market, potential contract coming in. That will be like less conservative because we don't know is whether it's performed it before or what is the thing like will factor in its performance. It should be like go at the bottom, like it's like a cherry on the top. Like if everything on the foundation is doing well and predictable is doing well, then everything else we should treat it as like cherry on the top. But of course, like we not disregard this and our forecasting, but like make sure that you understand the layer of your cash flow map that help you to be ready for cash flow situation. Number 2 is define the allocation strategy. Growth doesn't happen by chance, but it's happened by intentional capital deployment. Number one is always have a allocation in this. Number one is operating reserve safety. How much cash needs to be to sit untouched? You just can't touch it. Like maybe that is 3 months of operating expense, that is 6 months operating expense, and put it in the reserve that you not touch it because there's someday we don't know the rain, the storm, we don't know in terms of economy, and we don't touch it until like it's necessary situation. There's client that I told them like, okay, this is $200,000. We will defend in every single way that we can to make sure that we survive the business without ever touching that fund. That's the number one. Number two, growth fund, offensive. This is how much that we dedicated for the expansion. And finally is the owner compensation. And I know this is a very hard thing to say because I know like many of us as business owner, we get paid last. That's how team sometimes. I know some of my clients, I see that all the time. The people on the team don't understand that their business owners actually get paid last. But it doesn't need to be necessary that for a long time. If now you plan for 2026 and you put it in the correct and sustainable take home, whatever that number is, your personal financial obligation to your family, to yourself, how much is it? And of course, I know in community and in online, people always say, oh, I will not pay myself so that I just reinvest to the business. We grow the business, I know. And grow business need funding, need capital, I know that. But you need to make sure that you do in the way that is sustainable, not can be like losing your ability to stay in the business because end of the day, like if you not eating, you lose your personal performance, this is no way your business actually will perform well. And of course, I'm not like romanticize of hustling and burnout. We all need to hard work, and I work the same amount of time now compared to when I was in my 20s. This would not change in terms of amount of time of working, but of course your personal need to cover enough energies, enough responsibility to take care of your family responsibility. And that's make you have the energies and the right mindset to come back into the business to build it. I think there was one of the saying that saying like building business means that building your nervous system to be able to manage and grow the business. So that is why don't ever neglect your personal finance, your personal pay for yourself in the right way. So this step is shift you from simply spending the money to like deploy the capital in the strategic way in 2026. These are 7 pillars of financial architecture. Doing this work is not easy, not because of the math, but because it requires present, courage, and emotional honesty. But you are not behind. You just simply prepare for the strongest, the most stable year for your business that you ever had. Build the foundation. Build your nervous system. Build the capital, and everything is integrated together at the lister of the company. Do this work now, you will enter the new year with clear, steady, and with the confidence and data back blueprint for the massive growth. And if you actually want to have us to take a look into your numbers and give you some recommendations, just like send us an DM, an email. I'm happy to take a look into your numbers and prepare for the new year. Thank you so much for your time today, and I hope that this episode is helping for you and stop just running a business and start actually building it. Thank you for your time, and I cannot wait to talk to you in the next couple episodes. Bye bye.